Welcome to Financial Freedom with the Flipping Flanagans, where we help real estate agents and already successful business professionals create legacy wealth through real estate. We go by the Flipping Flanagans, and we don't actually flip houses very often. When you drop the F bomb a little too often, add that to a real estate background, you get the Flipping Flanagans. We actually buy property to hold and see long-term gains protected from inflation while seeing amazing benefits from appreciation and depreciation. See you on the other side.
All right, we are back, and it has been one crazy week or two. I feel like the few times that we've done this now, hon, this one it seemed like there was maybe a little time before we got ourselves in a position where we can at least have a conversation. Do you
Yes.
agree?
Oh my gosh, yes. So our life has been a little bit of a whirlwind the last couple weeks. I was out at a real estate convention for a couple days, or I should say a workshop more than a convention, but it was super intimate setting where we like really dug into our business numbers. And Brad, where are you at?
Hotels and planes, trains, automobiles of all kinds. And then things are gonna happen. And so happened to find out that somebody who's been close to us for a number of years unfortunately passed, and then you cancel your plans and revise again just so that you can make time for those things that pop up unexpectedly. So when that happened, to clue everybody in, I had to delay my travel plans. Fortunately, have great teams in place to adjust fire as needed, but I was able to jump into the RV instead of getting on a flight, and then drove that from Omaha to Grand Junction, which I didn't make it a whole way the first time because that's on a good day probably like a 12-hour trip, and then through the mountains in what are those things, snow plows like right in front of me, and it was still very clear, but I'm like, uh-oh, I'm going into something crazy. So that trip made it there, got in Friday morning in time to take a shower and get to the meeting, and then wake up Saturday morning, get back into the RV,
So what was your
drive
meeting for? Just curious.
mortgage related stuff. It's top secret actually at this time.
Oh, okay. I didn't know that.
It's not necessarily top secret, but we are growing on the mortgage side, and so there was a combination of year-end conversations, and then met with a great individual who is helping us expand into the Phoenix market. So I'm licensed and help do loans in the Arizona area. It's going to be good to have another person here full time that will be able to serve the great state of Arizona as well as some others. But that's
Yes.
good hot topics for Q1 2022. I can't believe it's here. But
I know. It's been fun doing some business planning. Speaking
then
of
waking up
crazy
in the
travel.
camper, like we don't
Yeah.
have, well, we don't have the jets, at least not yet. And so it was just neat to have, of course, that family time. So you try to figure out the efficiencies and how do you make time for everything. And then being able to just drive across the country with your little ones is definitely an experience and a memory.
Weather says you're not coming home tomorrow.
That's not going to be cool either. So, by the way, but I'll make the neighbors party.
It's so crazy.
Couldn't get decent rest the two times that I stopped, but eventually I guess I finally made it to Arizona, and all I wanted to do was nap, but I know we needed to eat. But then when I got in the driveway and there was the pallet of flooring at 67 pounds per box for roughly, I don't know, I didn't count them, but I know there was
So to catch everyone
close.
up here, we have a house in Arizona, a house in Colorado, and a house in Omaha. And I might have ordered a ton of flooring for our house in Arizona. And I didn't really know if it was there or not. But Brad found out that it was there as soon as he pulled in the driveway and was super tired.
Well, I think I calculated it to be
At
around
least I got him to put the
1,400
bathtub in the casita.
What? Oh yeah, I didn't have to lift that. But I did calculate it, and I was proud of myself because I wanted to work out, but I was really tired, so I knew I wasn't gonna work out. But then when I
See, I
did
was
that,
watching out.
did you get to watch me on the ring?
No, I watched James. I got the alert that there was motion in the garage. I clicked on it, and little James was trying to carry some floor.
Oh yeah. No, they were as much as he weighed, so that wasn't going to
Oh,
happen. He did pack it all up though, and so yes, getting the kids involved again was fun because he did put everything for the from the trash standpoint, keep it organized. So nonetheless, I'm here. We feel like I got a little bit recharged amidst the other few things that I've been trying to handle. So
yes. Our
um,
initial goal was to be in Colorado together. And then I was going to fly from Colorado to Salt Lake City, go to my workshop, and then go back to Colorado. We were going to ski, do some stuff, but plans
oh
all
yeah.
changed, and that's okay. We are happy to be here and healthy. Like Brad said, close friend passed away, and that's pretty hard. Which we'll just kind of, speaking of that, when we talk about like the attorneys and the CPAs and stuff, it's like when as you're growing your company, like unfortunately we do have to have some of those things in mind.
Oh yeah.
And
The guy I told you, that owner of the storage place that I was talking to today, or that drove me home after signing up for a storage spot for the RV, um, all the things that he has and how long he's been doing this, and he said he still doesn't have like a trust or even a will to help put those organizational pieces in play, and he does have two kids, and I can't believe how much I learned about this guy in just a short period of time. But um, we're all out there being busy, and it doesn't take much to throw a wrench in those plans. So that would be actually a great thing to share um, for our notes in the future.
yeah, definitely. So that we kind of had an outline for today. We obviously, as you know, that we just talked about, plans don't go as expected. So we're still going to go with kind of off of our last week's topic, and build on that a little bit. So going to kind of back to the basics for us, I really wanted to talk about personal financial statements. And Brad, I'm going to let Brad as you can probably hear, I have a terrible sinus infection.
You
But we
sound
are committed.
great.
Oh, thanks, honey. But honestly, like we are committed to doing this, and we weren't going to let a little sinus infection prevent that. So here we are. I've got my emergency next to me, got my water, and Brad's going to do most of the talking from here. So Brad, just kind of when you, something I think most people think is I need a whole bunch of cash to start this real, like investing, not necessarily real estate investing, but just like to get my life to where I want it to be. And that's really what this whole thing is about, is like building a life that feeds you and your family and your goals.
It's mapping out your path as early as you can, as efficiently as you can, so that you can embark on the journey. So, does that sound about right? Like we're going to talk about getting yourself
Absolutely.
purchased ready.
Yes.
Okay. So having the funds is probably the most, or if not at least top three critical components in getting onto the journey and actually starting to get your investing done. So most of the time that's going to include a bank, or at least in our model, our strategies, it's going to include borrowing funds. And as I mentioned, like first intro call, we prefer to secure funding from a bank solely in our own names, as opposed to going in and partnering and getting private equity, that kind of stuff. So there are plenty of different strategies, and we can share tidbits here and there on those as questions come in. But for
And
the most
I'm
part,
going to just stop you for 1 second. I'm so sorry.
no, you're good.
As we talk about that, because there are so many different strategies, for some people, hands off and getting an investor pool that might be for you. We really, being active in real estate, finding the deals, and with Brad, like having such a brain with financials and being able to connect with so many different commercial partners, residential partners. For us, hands-on, and we're not, when I say hands-on, we have people who help us. So I don't remember the last time I showed like a rental property or even in one of our rental properties. But when I mean hands-on is like, we're analyzing the deal, we're finding the money, we're purchasing that property. And that works really well for us being in real estate and him being on the mortgage side.
Right. And then
sorry.
No, you're good. I like it when this is what it's supposed to be, is the discussion piece. So we both have very, I don't want to say defined, but I mean, we try to stay within our boundaries of our strengths and weaknesses, or avoid our weaknesses and I don't, do I allow you to do stuff, honey? I'm so picky about the words, but anyways, again, we went through that whole period where we weren't sure who was doing what and curious about how to do what each other were doing. And then we finally figured that rhythm out where it's like certain aspects of the process are just better in one hand or the other. So, being able to identify those and then not to be leaving anybody in the dark, but just to like, no, this is the area that I can focus on. I can't worry about how to negotiate with the seller. You know what I'm saying?
Yeah. And like to kind of fill people in for, Brad and I have been together since 2008, but we've had a break but we've been together and navigated a lot of stuff together. And we've always had a working relationship. Like from when we first moved to Omaha together, he got a job at a local mortgage branch here and I worked the front desk, and then I got my real estate license. So we've always had this like working relationship together, and it's always been good. It's kind of funny because we'll joke about, like I used to be sitting in the model when I sold real estate and sat in the model homes, and we'd be like fighting in our personal lives. And I remember being like, okay, but I need you to run this pre-approval for this client. Okay. Like we like are able to put personal aside and focus on our business. And before that was a lot muddier. And like, it was hard. Like if we were in an argument or something was going on to navigate that. But like, I mean, we really don't fight anymore, which is awesome and a blessing. Like our marriage is completely transformed, and they say that happened over time, and totally believe that now. But where I was kind of going is like, we learned I don't need to overstep what his strength is. And if I take control over that, it's going to cause problems. It's like real estate agent and lender. I don't tell the lender how to do their job, and the lender shouldn't tell me how to do my job. Like now,
Right.
can we work together and have a working relationship so that we can navigate this? Like the lender is going to give me input on how I can structure an offer, maybe to be, whatever, however you're looking at it, to be more organized or, depending on the borrower, things like that. But they're not going to tell me how to negotiate like the price of the home. Like this home is worth this, like stay in your lane. Right.
Right. It's more just been a collaboration as opposed to battling for all the control.
Yeah. And now like we really are like, we look at all of our businesses because we do have multiple, but we look at it and say, okay, like when we were growing our rental thing, I would find the tenant, I would market the property, I would meet the tenant on site, I would show the property, and then I would hand it off to Brad. He would run the credit application, he would screen them, and then make the decision on the approval, and I would get the lease signed. So we knew that like I wasn't gonna, now it gets messy if I start to try and do credit applications and he's super familiar with it and he has his way of doing it and he understands credit reports way better than I do. So it's, that's just one aspect of like figure out, like we have a move in, move out checklist, review that, or not move in, move out checklist. I mean like a full checklist from when you buy a property to getting a tenant in there. Figure out what each of you is good at. Or if you're just individual, then maybe you have to hire some of that out. But for us as a married couple, like, here's what I'm going to do and here's what you're going to do. And now if you stay in your lane, you're going to be super efficient.
Right. And we both kind of have administrative roles, and I'm sure there's plenty, and we know some that, maybe the wife is in real estate and the husband's a contractor. Well, the wife as the real estate agent isn't going to want to go in and swing the hammer, and the contractor is not going to go and get DocuSign out and make sure that the contract has all the right spots filled in, and make sure that part of the deal is together. So that's the defining of the roles, and identifying your competitive edge is kind of what I've always seen it as. Because if you're in the contracting world, you have a great benefit that we don't have. When you have your real estate license, you have a benefit that the average person doesn't have. So we all have some sort of occupation, generally speaking, that might lead into strengths that are required as a part of the real estate transaction or investing. So we can always try to have a conversation too in the future, or one-on-one with somebody, to help them learn about that job description, like things that exist that they don't know yet because they haven't done it. I think that'd be fair to say we can help identify who can take on which tasks as they embark on the journey, as I seem to have phrased for this call.
Yes. So let's kind of go back to what we initially were going to talk about, was kind of building that plan, mapping out your plan early on.
Yep.
And so we've talked about our first property that was bought on an FHA loan as a primary residence, lived there, and then rented it out. The second home that we purchased for specific investment purposes, my grandpa passed away. And so his property ended up being available, and his kids were all out of the state. And so me and Brad had the opportunity to buy the house out of the estate. We didn't really have any money then. So Brad, I'll let you kind of speak to this. Like, how did we structure that first? The second investment property.
So the hunt for a bank was something that had been ongoing even before that opportunity kind of came up, because I think we had our eyes open and we were eager to grow what we kind of started there. And to date, I know we're in excess of our fifth banking relationship at the least. So you'll find that there are banks with certain target markets or certain appetites, if you will, for a particular type of client. And really taking the time or getting the recommendation or referral from somebody as to which bank might entertain a certain circumstance or situation is critical.
Yes, if Brad looks at your personal financial statement and gives it the blessing, he can usually get you financing. Not necessarily through him. I mean, from another bank.
Yeah. So this is all like relationship banking. Some would say commercial banking. Some would say portfolio banking. It all, at the end of the day, it's generally a community style bank, unless you're already in the hands of a Wells Fargo and a private client and something like that. But even then, there's not a lot of negotiation or wiggle room or creativity being exercised. Just the bigger banks, of course, have more structure and less discretion as to the transactions that take place. So there's different lending authorities based on maybe a position or a title or rank within a bank. And so that's how the whole thing started with me, was networking with some of the small business owners that I had already had relationships with, and then getting information or feedback from them about banks that they had worked with. I do know that I did actually coordinate with or have a relationship with somebody at the Small Business Administration locally, and they have connections. So if you're grassroots and you want to just go and try to hunt by yourself, by all means. If you're ever looking for assistance, that's part of what we try to do is connect people and good people for the greater purpose. So get me back on track, honey.
Okay, so what assets did we use as our down payment? So you found the bank. So you found a bank for us that would work with us.
Yes.
And they, I think, wanted 20% down, maybe 10%. I can't remember. But what
That's
did we use? What did we
I
use
think
for the
I know where
assets?
you're going at. Like,
Okay.
this feels like a
So
quiz, trick
it
question.
is,
So
he didn't know where we were going today.
no idea. So I've been riding a bike and doing all kinds of stuff today, but this is more I like to be. So it's all about organization, as organizing your information. And so in that event, I think we had a paid off or a free and clear truck that we borrowed against to help with the down payment. And then we were able, there's always a way to structure it to the point where maybe you can get a little bit more, but without helping giving your banker the information they need to help make the decision. It's a little tougher to get the outcome that you might need in order to move forward in a specific transaction. So like you said, I mean, we didn't have the funds, and we needed somebody to make a more risky decision from a bank standpoint. And in that case, we had some renovations that needed to be done. So there was multiple parts of the financing that we had obtained. I would say up to 3 parts of financing, between leveraging personal property, leveraging the acquisition itself, and then borrowing money to fund the renovation piece. Does that help answer the question the way you were looking for it?
Yes. So
Okay.
basically, Brad's a badass when it comes to reviewing financial statements. He's been doing lending for a really long time. I couldn't even tell you how many years anymore. But basically what I wanted to kind of get into is, so many people go from, I got my first mortgage, I knew that I had to have 3.5% down or 5% down or 10 or 20% down, and you have that solid number. And when you're building out a personal financial statement and you're working maybe with more of a small town bank or a commercial bank, they're not looking at the same thing that you're looking at when you're purchasing a home. And most people only have experience with a home purchase, and going through, all the different applications, submitting all their W-2, all of the paperwork that goes along with a loan. And it kind of, honestly, like when I talk to people about investing, they're like, am I going to have to go through this whole process again? And it's a completely different, you can go through that process. I don't want to say you can't, because there are ways. Brad touch on that kind of, but like what I wanted to dig into is really like, what is a personal financial statement? What does it consist of?
So personal financial statement is kind of a big overview summary of your financial life, or a household's financial picture. It's supplemented, at least in our case, with other documents as well. So again, assets versus liabilities equals net worth, and that in the end is a oversimplification of a personal financial statement. There are many different forms and templates and things out there. As you know, I like to create my own stuff. So mine's a 2-part spreadsheet that prints out as a PDF, and then we have to share that with the banker. So that, at the end of the day, is likely one of the most important documents to have when building your private bank or commercial bank relationship. On top of that, it's going to be supported with a tax return. However, when you're talking like FHA, conventional, the traditional financing and mortgages that you obtain for an individual property, that's called secondary market mortgages, because those are packaged up into tranches and mortgage-backed securities and traded on the secondary market, just like a stock or another type of bond. These are private banks that are putting this on their own books, as long as you fall within the bank's own set of guidelines. Then they give the blessing, they approve the loan, they finance it, and then it's a direct relationship, not a, oh, are they going to sell my loan to somebody else? It's a partnership with your local bank for the purpose of your business and your investment property.
Yeah. So to kind of wrap everything up, the last thing I really wanted to touch on, and going back to that bank, is like, okay, we're working with a relationship style bank. So now, where are we going to invest? And so when we analyze properties, something like I remember when we first bought properties, we had like our Benson group of properties, or like Northwest, or like North Omaha. And then we had our Millard properties, and then we had our Sarpy County properties. And we kind of had like these three groups. And that's when we talked about like 5 to 7 properties per LLC before. I think that's like what we started with. We put about 5 to 7 per LLC before we combined everything. We did that not on purpose. It was where we were finding the deals, but then we started organizing them into those areas, because it's easier you have vendors, and a bank, when they look at you too, is they're going to say, how are you going to be able to manage this? And so when you think about that, if you have a handyman or a friend that's going to help you with the work, if you're sending them 40 minutes away, to these properties for like little tiny maintenance items, it's not super efficient. So as you start building, you're going to know your market, most likely where you live. So most people do start investing pretty close to where they live. And that might mean you spend a little bit more on the property versus across town or something, just, from a convenience standpoint. And like Brad mentioned, I think on the last call, is being able to drive. Like if you can drive by it on the way to pick up your kids from school, that's a huge win. Like it's an easy, efficient way to do business right off the get-go. So when we talk about mapping out your plan early, kind of starting to look in like specific areas. And then when you do the second one, like finding multiple properties in the same area is going to be efficient. And then like the long-term benefit, and like Brad, like we said, Brad's in Arizona. I was in Colorado over the weekend for 2 days, and I just got home Sunday night. I don't even know what day it is anymore. But now, having properties in areas that we want to build businesses in and spend time in with our family is like the benefit of doing all the hard work. Like that wasn't something we planned early on. We weren't like, hey, we want to build this rental portfolio and then someday have properties in Colorado. Like that wasn't the goal. But then we started traveling more and like realizing, hey, this is like, if we fly out there and let's say our home is booked and like Airbnb or VRBO, and we stay in a hotel, but we check on the property and would go out there and do some maintenance on the property or whatever, meet the hot tub guy. I was trying to do this whole month. Those things are now tax write-offs. So, and talk to your CPA. I'm not a CPA. That's why we talked about that in the very first call or second call. Actually, Brad, we have a guest next week.
I was going to say, aren't we going to have a CPA on the phone?
Yeah, we're going to have our CPA on our call next week. So
I'm sure he'll have
super
plenty
excited.
of disclaimers too, but at least you can get some really good nuts and bolts and not have to hear the disclaimers from people who don't have the license to give the advice. So
yes,
but
going
yes,
back to
can I steal a moment from you?
Yes, please do.
As you were saying that, so at the end of the day, when you're going to get a job and you're going to sit down at the table with them, you had to prepare your information in a manner that would help them believe that you could be capable of the opportunity at hand. And so it's literally a very similar engagement where you're putting together a resume, and that resume needs to demonstrate your already learned and demonstrated abilities, as well as how prepared you are for what's to come in the future. Because you don't just want that one job, you want to go up the ladder and gain more responsibility, and along with that, the reward of greater income. So literally putting everything you need to put on paper, because contrary to what you might be used to on a lending side, if you've only gotten a secondary market mortgage through a run-of-the-mill loan officer such as myself, then we had to package this up. We had a whole guideline that states what can and can't be done pretty clearly. And then you have an underwriter who has to make the determination if your criteria meets the guidelines and the documentation supports it. Very systematic. On the flip side, the commercial world, they have a board and they meet on a periodic basis. It's generally called a loan committee. So they call They say, we have committee this week, and so you can't get a hold of anybody because they, are in the meetings all day long, and all they're doing is that particular commercial loan officer or vice president of the bank is usually kind of the title that somebody who does lending in this type of a platform, they are pitching your case to a group of people who are well versed in investing in people who have businesses and goals that require their money. If you can make that person's job easier through the right documentation, then once they believe in you and you've given them all the documents that they need to help tell that same story to the group that actually has to sign off on it or give their blessing, because it's just going to go to the vote and then the majority will determine whether or not you're approved for that credit or not. So that has been my goal. And again, my competitive advantage is I've been doing it for so long with different people and seeing different households and the way that they run their financial life, that I was like, oh, well, I should just make this really easy, be conservative, and give as much documentation as I can, because they're not coming back to you. Like, you don't have to give a bank statement majority of the time for a commercial loan. They assume that if you're getting to the closing with the money, that you had the money. So it's not like, hey, what's that deposit? Which is where my life is. I have to document every single little thing on a individual home purchase, but I can go to them with a portfolio of 10 different properties and not have to give a bank statement, but I have to give them all the other information, which is really what's the most important. Debt service coverage ratios, and credit is still a factor. Your tax return, if you're self-employed and you've gotten a hard time in the past in the secondary market, they understand that and can make their own determination, as long as the story can be told from a standpoint of your revenue and expenses on your tax return. It doesn't matter exactly what the bottom line is, like it does for me over there. They just need to be able to see the forest through the trees. That's where it gets really fun, because when you look at, everybody has such a different scenario, that when you can figure out the numbers.
That all is like over my head. Just kidding.
Well,
but
it complements it with
why,
like the deal analyzer. That's why
absolutely.
like I don't know, everybody, there's a bunch of places that talk about how they have a deal analyzer, but that's what I love, is to plug in the investment, which usually you found, right? Like something somewhere off market, on market, whatever the criteria was, then
Brad's
you
not
end
allowed
up
to find
sharing
deals anymore. Just kidding.
Shut it.
Totally kidding.
Mine just come with more work. And now you show the banker, okay, hey, here's my stuff, and then here's the opportunity, and here's what I'm going to do and how I'm going to do it, and then what it's going to look like and become. And all you have to do is study and take the time and organize it. And then once you put it in practice, because somebody gave you the opportunity, even if it was risky or maybe took a little extra work, if you follow through and you prove it to be successful, it becomes easier and easier, which is why I end up talking about relationship banking. Of course, I'd love to do everybody's loan, but I know that the loans that I have to offer may not always meet everybody else's criteria or particular situation.
Yes, I agree. We went way over time. So I'm sorry, everybody. We try and keep these to 20 minutes.
I know, but you get into numbers and
my brain literally glazes over when we talk about numbers for over 30 minutes. And that's okay. That's where strengths and weaknesses come into play, and why me and Brad complement each other so well. Is he definitely, we don't have conversations like this other than over, he goes and meets the bankers and he brings it back to me and he's like, I found the money. All right, let's do this. So it's been a pretty good thing that we've got going. And if I tell him about all the updates I want to do to a house, he's like, I don't care. Just tell me how much it's going to cost and how much value it's going to bring to the property, and let's analyze it. And if it makes sense, we'll buy the property. So it's Definitely. So I didn't mean to like sound uninterested because I'm not. I was absorbing way more information than I like even people who are listening. I was probably like, wow, like that's really crazy. Like to think about all of those things and just kind of bring awareness in general. So just to recap, kind of what we discussed is we're going to have our CPA on next week. So we're super excited about having him touch a little bit about personal financial statements and kind of building that. We'd love you to join our Facebook group, Building Legacy Wealth Through Real Estate. We're going to dig into some of these topics more within that group and have some group discussions around what people have questions about and what they would like to learn more on. And then, like I mentioned really briefly, is kind of just knowing your market, and it's much easier and more comfortable to invest where you know. So being familiar and finding a bank where you're familiar and kind of generating those initial relationships where you're familiar is definitely something that's going to help you grow and prosper quicker versus just wherever the deal lies. Because overall, even if you find a really good deal, but you end up spending a ton of money and getting people there, labor or maintenance, it didn't end up being that good deal that you thought. Brad, any final notes?
No, I look forward to making, what did you say? Your eyes glaze over a little bit more.
Yeah.
In future episodes, it's all about
Yes.
spreadsheets for me.
And I love you guys, for everyone who's reached out and sent a text and said they're listening and have gotten some nuggets out of what we're sharing. That's super, super important. Keep it up. It keeps us motivated. Obviously, we're having a conversation here. We don't know who's listening, and we'd love for you to subscribe to our podcast. We'd love for you to share it, and just let us know what you liked about it or what you didn't like and what you'd like to learn more about. So until next time, thank you guys so much.
Have a great one.
Thank you so much for listening to today's episode. We hope you'll hit that subscribe button to stay in touch. Also, join our Facebook group at Building Legacy Wealth Through Real Estate to find out more about what we do and what we offer. Thanks so much, and we'll see you next time.